What's up, YouTube? It's your boy Ronell. Y'all know how we rocking. Um, I pretty much created this channel because I wanted to teach people about, or pretty much expose financial education. Um, Stock market investing for beginners is the title of the video, but it's not all about stocks on this channel. The majority of it will be about stocks because I feel like it's the best investment tool to use outside of real estate. It's hard to get into real estate because you need a lot of capital to get in there sometimes, depending on your situation. Um, I'm new to doing these YouTube videos or whatever, so I do have my little checklist. I just moved into my new apartment here, so I'm gonna shoot the first video outside because everything's still getting fixed up in there. I got an office being built out, and I have a whiteboard in there for notes and writing down things and showing everybody everything that I got going on. So let me go ahead and get to this. But yeah, like I said, the main purpose of the channel is to it's because I want people that look like this, you know what I'm saying, to have an advantage. We've been at a disadvantage for a long time. Blacks, Hispanics, minorities, period. You know what I'm saying? And I know a lot of reasons that the people don't invest is out of fear, but a lot of the reasons is we don't have access to capital. You know what I'm saying? We're not given those type of opportunities, whether we have money or not. It's certain things that the powers that be don't want us to have. So we have to create for ourselves. So like I said, that's the purpose of the channel. So let's go ahead and get started. If you guys like what I'm doing here, just make sure that y'all subscribe, like the video, comment. If y'all got questions about anything that I'm saying here, because I'm going to use some terminology that a lot of people ain't familiar with, but I'm also going to break it down to you. So if you got questions, please comment, and I will get back to you. And like I said, also share, like, and subscribe, man. Share the video with people that you know that wants to create financial freedom for themselves. Um, so pretty much what we're going to be discussing here today is stock market for beginners. I'm going to be going over quite a few things. What is a stock? How to buy a stock? When to sell a stock? What do I do to research stocks? How much you should hold? Like a lot of different things. I'm not going to go into super detail because, like I said, it's for beginners, and I don't want to bombard you guys with too much information. So here we go. The first real thing here is used to build wealth. Pretty much, it's one of the best investment tools, in my opinion. Um, so whether it be like real estate investing or crypto or even saving money, you can do all these things to help yourself build wealth. But when it comes to stock market investing, I feel like it just doesn't get any better than that as far as like the opportunity, you know what I'm saying, for making actual money. Now, as far as building wealth, you do want to have a safe nest. That would be like 3 to 6 months worth of all of your expenses, bills, and stuff like that. And a lot of times that's hard to do. But I do recommend if you can do that, try to do that first before you start investing. Clean up any debt that you got, things like that. Um, and another thing, as far as stocks, you want to invest in things that you know about. Choose companies that you have an understanding on. But I'll explain to you how to figure out other things with companies, what they do, and all of that, what have you. Now, what is a stock? So pretty much a stock is a share of a company, a portion of a company, which you can buy, and you literally become part owner of that company. It's a small, small, small part. Sorry about the. I live near Air Force Base, y'all. So yeah, excuse the noise and everything like that. But like I said, as far as the stock is literally a portion of the company, so you literally are a part owner of a company. You're not a big part owner though, so I don't think you can just walk into Amazon because you got one share of Amazon and start telling people what to do because it's not gonna work in your favor. But yeah, you literally are owner of the company. The more shares you have, the more ownership you have in that company. You could end up being on the board of directors to where you're actually choosing the management team for that company. You get to vote on that, but it takes a lot of shares and a lot of ownership of that company for you to achieve that. Another thing here is how do you actually buy the stocks? So they have brokerage companies. There's TD Ameritrade, Fidelity, Webull. You can use Cash App nowadays to invest in stocks. There's so many of them, but I like to use Fidelity personally. Their customer service has been good to me. I've been dealing with them for, I wouldn't say like 3 years now. I got late to investing, I'm going to be honest with you. So I'm not no millionaire, nothing like that. I'm not gonna sit here and cap with y'all and tell y'all I got all these millions, but I'm doing better than most. You know what I'm saying? And my thing is, I just want to help, man. Um, but anyway, there ain't no fees nowadays. You know, you can get on these platforms, these brokerages, and create your account, sign up, and you can buy and sell these stocks with no fees. There used to be fees. They used to charge you $20 just to buy one share or to sell one share, or even to buy 100 shares or sell 100 shares. You still gonna pay that $20. Now without that commission, it's so much more profit that you can take. It's ridiculous. You know, you might as well be taking advantage of it. Now, what is the stock market? The stock market is literally the market itself. It's where you can go and make these trades. I don't like to say trades because trade usually is like a daily type of thing. I'm a long-term investor and I preach and teach long-term investing. But yeah, you can actually trade these stocks with different people. Now you're not face to face with these people like, hey, I'm buying this, you buying this, that, and the other. But that's literally what you're doing. The NYSE, the New York Stock Exchange, is literally where all this takes place at. There's people that's selling and there's people that's buying at any given time. So it's always happened. It's a consistent thing. Now, the risk. There's definitely risk in stocks. Everything isn't 100% guaranteed or anything like that. There are companies that are less risky than others and different strategies that are less risky than others. But there's always a risk. The worst risk of all is if you invest in a company, for example, like Apple, and let's say Apple just goes to zero, the stock itself. They dilute shares to a point where they're valueless. They don't have any more money on their cash. They don't have any more cash on their balance sheet. Um, they're in debt. They're filing bankruptcy, and they go to zero. That's a possibility. The odds of that actually happening, though, especially with a company like Apple, is so minuscule, it's so small that it's probably not going to happen. But let's not say that because, like I say, all things are possible. But that's why you need to learn, you know what I'm saying, to choose companies that's not going to put you in that situation. Now, let me see here. Excuse me. Now, how much money can you make? So, the money that you can make is unlimited. There is no limitation to how much money that you can make on the stock. As long as that stock is going up, you're going up. As long as you're investing, you know what I mean. There's no cap to whatever it is. Now, losses, there you can't lose more than what you put in. Period. You know what I'm saying? But there's different ways you can. And that's when you get into like options trading and things like that, and buying put options and everything. But this is a beginner video, so we're not gonna get into all of that. But like I said, you guys got questions, be sure to throw them in the comments. I'll get detailed on this stuff if I have to, just to help you guys out. Now, there's another question out there. I don't know if you guys are familiar with index funds. Now, the question that I wrote down, because I feel like a lot of people are going to be wondering about this, is should they invest in index funds or individual stocks? Now, me, myself, personally, I do both. I do invest in index funds. It is less risky, but I like to have control and power over my money. And you do have some at that, you know, to a certain extent. But when you buy an index fund is generally something that tracks the market. Like you got the S&P 500. I'm sure a lot of y'all are familiar with that, and that's literally the top 500 companies in the market. You know what I'm saying? They fluctuate. Sometimes companies come out, sometimes companies come in, but the majority of them that's there are there. And there's a less expenses that you have to pay when you're dealing with an index fund as far as like the management, because the account itself is going to be managed for you. You know, you don't have to do anything. All you have to do is consistently buy into this index. And like I said, there's multiple ones. There's the S&P 500. There's the Nasdaq, which is a tech-heavy index, and there's the Dow Jones. There's the Russell 2000, which are like small cap companies that are like, you know, not $100 billion companies like, you know, Facebook, Amazon, and all that stuff. They got smaller companies as well, which is where I feel like this year is where people need to be putting their money at, in the small cap companies. Next thing here, what we have, how are you actually taxed? So believe it or not, you guys are taxed on these stocks, but you're only taxed if there's a taxable event. A taxable event is literally when you sell a stock. Period. You have to sell a stock for profit to get taxed on it. If you sell a stock for a loss, which is crazy, you can't tax you on nothing that you didn't gain. So, but if you sell a stock and you make gains on it, they are taxing you. Now, there's two types of taxes that they can do on you. Now, there's long term and short term. Short-term gains that get taxed, they taxed a lot more and a lot higher. They're like your normal income tax rate. Like they can be up to 30%. So like you can buy. Let's say for instance, this is not the price of the stock. Let's say Apple was $75. You bought a share of Apple for $75 and it went up to $175. Now you made $100 in profit. Now you sold it before 365 days, which means it's going to be short term. Anything that's under that year is going to be short term, and so you can be taxed up to 30% on that, probably more. I'm not 100%. I'm not a tax advisor or anything like that. Get with your tax advisors to know the whole thing on that, but yeah, you can literally be taxed up to 30% on that. So that $100 is really more like $70 that you made. Now, say for instance, if you have a loss, though, you can write off the loss against the gains and kind of like offset. Now, let's see here. How do you know if a stock is risky? So to know whether a stock is risky, you're going to have to investigate. You're going to have to look at the stock's balance sheet. And to be honest, the balance sheet, the best way to explain that, I can compare it to a person. So say if you know a person that's not usually financially stable, like they're usually struggling on bills, they don't have cash laying around to take advantage of opportunities for themselves, um, bad credit, they got a lot of debt, credit card debt and things like that. Now, companies are literally the same way. A company has a balance sheet that shows you how much money that they have, like cash on the side, how much debt, how much they have in assets. It's literally a breakdown of the entire company as far as financials with the balance sheet. And when you see these types of things, if you notice like I said, the person that's dealing with financial hardship, companies deal with financial hardship too. Now, if you notice that type of company, in comparison to the person, then you know exactly what I'm talking about. And you know that that's a company that you need to stay away from. You want to look at companies that have trending and growing revenues and net income, on the bottom line. You want to see that trend going up. Now, sometimes you might get into a stock where it's not going up for the first year, even 2 years. I've been in a company where it's been 3 years before they start making moves, but on that third year, you know what I mean? Like I'm a long-term investor. Once that third year came, that stock shot through the roof. Shot through the roof. Now, it's not the third year of the company in its inception, but it's the third year that I was investing into that company. And that company's Tesla. And if y'all know about Tesla, just put it like this. I bought that company, I want to say after the split. I bought before and after the split. I bought them after the split. It was about $480 something a share, and right now I believe Tesla's around 1,100, something in that range. I don't have the exact numbers in my head right now because, like I said, I invest in quite a few stocks. But it's a great opportunity to take advantage of. Let me see here. Make sure I don't leave anything out here. But yeah, here we go. How do you know if a stock is going to go up? So the main thing to figure that out is, again, you going back to the balance sheets. You want to look at trends, what's going on with that company. And you also want to look at the business model. The business model is literally what that company does. If this is a business model and it's something that's trending, something that you know that's going to be profitable in the future, like I said, like with EVs, the electric vehicles. Sorry, y'all, we got a whole lot of people out here now. It's starting to have like a little gathering here, so excuse the noise and everything like that. But yeah, if you see like electric vehicles, I knew that this was going to be something that was going to be the future. Like as you can see, like companies, big companies like General Motors, Ford, all these people are going electric now, and the TAM on that, TAM, was literally means total addressable market. The total addressable market for electric vehicles is massive. Like this thing is going to be everything. ICE cars are going to be extinct sooner or later. ICE as an internal combustion engine. Those cars with motors and engines in them are going to be looked at like horses were looked at before cars came. So really think about that. And by me thinking about that and knowing it, that's what made me want to jump into the electric vehicle market. And why not go with the number one company in electric vehicles? So that's why. But yeah, those are the things that you want to look at as far as knowing when the company is going to go up and then what they're doing as far as trending. You want to look at that industry and see if it's a growing industry or not. And also the valuation. Valuation, which pretty much you want to know what the company's forward PE is. And that's just the price to earnings ratio. I know that this stuff sounds like, you know what I mean? Like I said, y'all got questions, please ask. Put that in the comments. I got you. But a forward PE is pretty much looking forward what their price to earnings ratio is going to be, and you want that to be like lower than the market. If it's lower, then you know you have an opportunity to make gains. The market itself usually is at like a 18 to 24 PE. So if you get something like in the 15 range, oh man, you got a great opportunity as far as that company skyrocketing and going up. And then the revenues to go up over 100% over the 5 year span. Now, a lot of companies won't do that, but there are growth companies that will. So once you get used to logging in and figuring out what a company's valuation is and if there's room to grow, then you'll be able to make those decisions. It just takes time and consistency and more learning how this actually works, which I'll help y'all get through this. So feel free, like I said, ask. Um, Another thing is the CEO, the management team. Those are other things to look at to know if a stock is going to go up. So, like a good CEO, a person that has a history of making profits with the company. The management team that he runs also has a history of being profitable. And also you want to listen to conference calls. Conference calls are something that most of these companies do every 3 months. It's quarterly, and they're pretty much going to go over everything that they're doing in that company right now, currently, and what their plans are for the future. So those are definitely something that you want to listen to. Conference calls usually last 30 to 40 minutes, and you can listen to them on the company's investor relations page, or you can download this app that I love to use called the Hungry Bull. And that on there, you can do a lot of research. It's a great app, man. Check that out. Download it. It's on iOS and Android. Let's see here. Now, how to research a company. Again, I'm going to bring that back to the brokerages. So, like, if you use, like, TD Ameritrade or Fidelity to invest, you could pull up a watch list. You could create a watch list. Or you could just pick on individual companies and then bring up all the financials about them. You can click certain spots and then bring up the balance sheet. And that gives you a lot of information on what you need to know if this company is going to be profitable, if it's going to go up. And that's pretty much your research. That's what you want to be doing. You want to look into these companies. You never want to buy blindly or just because somebody else says so. Even me, if I say something is good, that doesn't necessarily mean it's going to be good. I do have a great return on my investments, but that doesn't mean that it's something that you should be invested in. You know, because say for instance, there is a good company out there and you invest into it and it goes down. Now, you should never invest into it and it goes down and you sell, because you should be thinking long term that this company is going to go up anyway. So you never want to just put your money in there and when it drops you pull out. If anything, when it drops you want to add more so you can get it at a cheaper price. That way when it does go back up to wherever it was or beyond that, you make a profit. And now how to keep track of stocks. Again, I'm going back to the brokerages. You want to click on those. It literally could track your companies by the day. You could track by a 5-day span, 1 month span, 3 months, 5 months, or the entire existence of the company itself since it went IPO. That's the initial public offering. That's when the company first goes public to where you actually have an opportunity to invest in it. Now, when to sell a company. Now, that can be difficult. Me, I don't preach sell. I don't want to sell anything. Of course, at some point you're going to sell, but like I said, this is a long-term thing. I'm investing in companies for 3, 5, 7 years out, holding these companies. The only way I'll sell before those time frames on those companies is if something happened drastic, like the CEO, it's a different CEO now, and they have different views on the company and where they want it to go, or the business model changes. Like, say, for instance, you got a business model like with Pfizer. I'm sure a lot of y'all are familiar with Pfizer now since the pandemic. They're pretty much a pharmaceutical company, largest pharmaceutical company around. And let's say, for instance, Pfizer's like, you know what, we're not doing medicine or pharmaceuticals no more. We want to go jump into building cars. Instantly, I'm pulling my money out of that because I don't feel that Pfizer's a company that should be building cars. They might be good at it in the future, but for the time span that I'm looking for these next 3, 5, 7 years, for them to get to that point, they're going to have to take a long time to get to that transitioning. So, yeah, at that point, I would sell. I would pull my money out of there. But the number one thing that'll make me pull money out of there, that's number two, actually. The number one thing that'll make me pull money out of a stock and sell it is if I had a better place to put that money. If I'm looking at I'm getting a return of 10% on one company and I see another company over here that I can invest in and get a 20% return in that same time frame or shorter, I'll go ahead and pull my money out of this stock and dump it in this one. You know what I mean? So I can take advantage of those profits and opportunities there. Like I said, but you never want to sell just because the company went down. If anything, that's the time to buy. When the company dips, we call it buy the dip. Just think about it. Like, say for instance, if you know that these are are just ball. These I'm just throwing numbers out there, so these are not the exact numbers or whatever. But let's say that you know that a Dodge Charger goes for $20,000, and let's say you got an opportunity to buy it right now because it's undervalued. Like I was speaking about valuation. Let's say somebody's selling it for $15,000, so you know you could buy this car right now, keep it, drive it pretty much for free, and resell it. If you could resell that car within a 6 months to a year span, and you made 5,000, as long as you didn't put 5,000 into that car, you drove the car for free. That's called car hacking. You know what I mean? It's the same concept when it comes to investing. Now, how many stocks? That's another question I get all the time. How many stocks should a person hold? Now, if you have less than $100,000 in the stock market, you don't want to hold too many stocks. You know what I'm saying? You don't want to have over 10K in certain stocks. You know what I mean? Especially if you only plan with 100,000 or less than that. You know, and like I said, there's no limit. There's no small number that you need to have. There's no minimum. Like you can literally start investing with just $1. You know, seriously. And that's another thing too. I want you guys to follow along with me because after this, I'm gonna start a portfolio with just $100 to show you guys just how you can just turn a small measly $100 into $10,000. I'm gonna literally show you guys how to do that, and step by step, I'm gonna show you what stocks I'm buying to make this happen. And I want to do it two ways though. I want to do it with index funds because that's something simple, and I feel like really that's the best and safest way, and a lot of people use that. But I also want to show people you buying individual stocks, the profit that you can make on that is substantially higher than you would on just buying the market itself, like an index fund. Because buying an index funds, you generally buying the market in the S&P 500, and that usually goes up on average about 8 to 10% a year, you know, annually. But buying individual stocks, you can have a stock like myself, like with Tesla, and you go up 2,000%. You're not going to get that out of an index fund. So that's the reason why I like to buy individual stocks because I'm looking for a higher return than what the market can give me. Now, I do want to say that you guys are smart enough to do this, man. You can invest in individual stocks. I know a lot of people say most times you got these hedge fund managers and all these people that talk all this stuff about stocks, but when you look at their returns, none of them are beating the S&P 500. Like these guys talk all this stuff, and half of them don't even have their own money invested into the market. You hear them talk all this trash on YouTube and on TV, CNBC, whatever whatever it is. But most of them don't even have their own money in there to even be saying anything. Me, if you know me and been around me or involved in what I got going on in the last couple of years, you know that I have a majority of my wealth is in stocks. You know what I'm saying? And it's gonna be like that. I got 30% of my wealth in cash. The rest is in stocks, real estate, and Bitcoin. Not Bitcoin per se, but cryptocurrency. I actually don't invest in any coin specifically. I chose to go with the brokerage to where you buy the actual coin. So I don't want to sell the dirt. I'm gonna sell you the shovel. You know what I'm saying? I mean, well, I don't want to buy the dirt. I want to buy the shovel because that dirt. You know what I mean? But another thing that I want to talk about here, man. The last thing here is age and compound interest. Now, age-wise, man, the younger you are, the more risk you take. Younger people, you know, if you're less than 30 years old, this is the time that you want to take full advantage of the market. Take as many risks as you can. You know what I'm saying? Buy those companies that are a little bit more riskier, that'll give you a better return. But like I said, do your homework though. Definitely want to do your homework. Um, Another thing too, you want to always make sure that you know exactly what it is that you're buying. Like say for instance this, right? If I can explain to you everything about a company, like if you buy a company, you should be able to explain to a person what that company is, what they do. You should be able to tell that person everything about that company as if you were the CEO. And if you can't do that, that's something that you shouldn't be investing in. If you don't understand something, don't invest in it. Like I invest in simple companies. To me, they're simple. I stay within my circle of competence when it comes to investing. Like Tesla, I understand what that company is. You know, they make electric vehicles. They also make solar panels. They do a couple other things. They got SpaceX. I know all this stuff though because I'm invested and I've been studying. What else I'm investing? I'm invested in Apple. All the products that I use, electronics, are pretty much Apple, from AirPods to my phone to computer, everything. Um, Foot Locker, you know, like this is stuff that I understand. You know what I mean? On top of all of that, uh, that's pretty much the basics. Like I said, I don't want to get into too much detail on this. I just wanted to give you guys a video and explain to you what the market is, what my channel is, and what I'm going to be doing. I'm trying to stay away from all these damn airplanes. It's interrupting me here. But hopefully the sound quality is good on this. Like I said, guys, like the video, subscribe, give me a thumbs up, and share with your people, man. If you guys want to be on this investing journey with me too, starting next week, I'm going to have screenshots and videos showing you guys what stocks that I'm invested in. So look, like I said, it's going to be $100 that I'm starting it out with, and then what I'm going to do is every week I'm going to invest another $100 into that, into those companies, or into that index. I think I'm going to just start with indexes first, just to keep it simple for you guys. And then we'll go into the individual stocks to where I can show you how to turn that 100 into 1,000. You're going to be able to do it either way, whether you're doing individual stocks or doing it through the index funds. But like I said, with individual stocks, the returns are usually quicker and way, way higher than what you would get just from doing it in an index fund. All right, guys, so it was good kicking it with y'all, talking to y'all. Sun going down. It's going to get cold out here in Vegas, so I'm going to holler at y'all. Peace.